Hi, folks. Dan Bird here on Wednesday, December 20th. It is midweek, and I'm sure everybody was watching the market at the end of the day today and wondering what's going on. So I thought I'd do a very quick market update. It's a little late, so I'm not sure when it's going to get posted today, but let's just jump into it real quick. Share my screen and take a look at my website. So first of all, IBD did not change their status, still in confirmed uptrend. Something that's interesting in IBD itself, actually, I'm going to go to the leaderboard, which I subscribe to. And stock market takes a well-needed break. If those of you who have been watching me for a while, and especially in the last few weeks, I have been saying for the last 2 weeks that the market needs to have a pullback. It would be healthy for that to happen. I was kind of surprised that it didn't pull back earlier, but looks like that pullback may be starting now. So interestingly, let's see, right here, this is pretty interesting here. Substantial news on the economy or specific industrial sector, nothing to be found. A swoon in other financial markets, nada. The NYMEX crude oil futures edged up 0.4%. Gold traded pretty much flat. More likely than not, some large fund managers basically decided that after 9 straight days up in the major benchmarks, now was a right time to take profits. And that is exactly what I think is happening. It's profit taking. People are, finally the market is getting that pullback that I've been waiting for. If we look at the S&P, had a huge down right there. I'm going to show you something here in a second that's interesting. There's still a gap down here, but gaps don't have to fill. So it may or may not fill. The 21-day is what I'm looking at right now. Might not even get down that far, but let's take a look at the 65-minute chart. This tells the story. Last 2 hours of the day today. Market was having a very nice day, had a nice, move up in the morning. And then the last 2 hours of the day basically gave it all back and more. So on big volume for that last hour. So that's what a pullback, start of a pullback looks like. It's something that I've been expecting, waiting for. On this one here, it's still blue. It's right down at the 8-day moving average, and the 21-day is what I'll be watching. 21-day right now is at 46.20. Market ended today at 46.98. Let's call it 4,700. So another 80 points down potentially. It did, by the way, if we go over here and go to the chart section of my website, by the way, if you are interested in getting my newsletter, I'll talk more about this weekend as well, breakpointtrading.net. The newsletter is free. Let's look at the 3-year weekly chart for the S&P. First, let's look at the Dow, because the Dow hit all-time highs. So there's the Dow. This is a weekly chart. So this big white one is last week. You can see the one today for the week, and the week's not over yet. We've still got 2 more days left. Barely made a dent in last week's candle. So still at all-time highs. Let's look at the NASDAQ on a weekly chart as well. This one also hit all-time highs, all-time closing highs. It actually went to all-time intraday highs as well. Again, this is for the week, so there's 2 more days left. But again, it barely put a dent in last week's candle. So everybody on CNBC wanting to, I think there's actually something in here, everybody's trying to make sense of it, trying to say, figure out why it's going down. Could be a recession coming, and, lots of ridiculous, stupid comments. Don't listen to them. We are still in a bull market. This is a needed, healthy pullback right now. I'll let you know when it's no longer healthy if it gets to that point. But right now, this is exactly what I was waiting for. So if we look at a 2-year on the S&P, you can see right there, We made it up that high. Let's look at a 3-year, just like the other ones. So you can see we actually today just went a little bit above the all-time closing high. We still haven't reached the all-time intraday high, which are these two candles back here. And this is a weekly chart as well. But again, you can see that, that's what normally happens when you hit resistance. That's exactly what happens. I've been trying to teach everyone this for quite a while now. When markets hit resistance, or when stocks hit resistance, they most likely, what's happening is all the people that bought in way back here, if they're still in, and they'd be crazy if they are, but there could be some people still in, all they wanted was for the market to get back to where they bought, just so they can get out at break even. That's the way it works. So that's exactly what happened right here. Now, having said that, there are still a few things that I'm a little concerned about. One is this, again, remember this is a weekly chart on the S&P. So we have up here on the RSI, we have a slightly down right there. And we have significant up taken from about the same place right there. So that is a negative divergence. Not something you typically want to see, but it does, give you a warning signal that the market is ready for a break, ready to pull back. So I've talked about the divergences before. If we look at a daily chart, I mentioned this, I think, on maybe last Wednesday. I'll draw this one in for you too. Markets have just been going straight up, while at the same time, there is the momentum is starting to wane. So momentum's going down as the market goes up. That's typically means it's running out of steam, needs a break, time to take a break, pull back, reload, and get ready for pushing higher to all-time highs again. So there's the 21-day right there. I'll leave these in for those that are on the website. You'll be able to see that divergence. So that's basically what the market does. Let's go down and look at the growth versus value, because I mentioned this divergence as well. When the market was making parabolic highs, the growth versus value was pulling back. And I mentioned this last week. So this, for those that are listening, this should not be a surprise. It actually should be expected. The market is still growth versus value. Growth is underperforming value, or big institutions are rotating out of growth into value in this short little ramp up, this parabolic move higher. Institutions are moving out of growth and into value. This happened back in 2021, just before the big bear market. But we have a very different situation right now. It still has not broken this uptrend line. So that's what I'm going to be watching. This pullback, there's no way to tell really how long it will last, but I think it will be brief. And tomorrow we have GDP. In fact, let's take a look at, let me see here. Sorry, I'm not prepared with this, but we'll jump into the economic calendar and take a look at it. Because GDP is forecasted to come in at 5.2 tomorrow. It's a very healthy number. It's for Q3. This is for this week. Okay, GDP right here, 5.2%. Previous one was 2.1, so a significant increase. And PCE is the big one on Friday. It's showing right now core PCE year over year dropping slightly from 3.5 to 3.4. I think that's probably what it's going to do, but it is dropping. So it's going down. I think both of these numbers will be still positive for the economy. So again, I think this is a needed pullback. I don't think it's going to last. The other thing to keep in mind is that Friday is the start of the Santa Claus rally. So I will be tracking this on the website. I'm going to draw probably tomorrow. I'll draw the chart in here, even though we're not at Friday yet, but Friday is the first day of the Santa rally. So we'll keep an eye on that. Interestingly, on the industries tonight, and I'm doing this every night now. Last night we had 4 industry groups, primarily in the oil energy sector. They were all going up, meaning their short-term trend was up. Tonight, for the first time, we've got 4 short-term trends going down. So soft drinks, distillers, healthcare providers, and pharmaceuticals, they all notched a negative or a down short-term trend. For the Magnificent Seven, we'll take a look at each one of these because those are the ones that everybody wants to see. Their bias indicators are still all very bullish. So we'll take a look at Google. Google had a big day up and then came all the way back. Still a green bar though. In fact, let me make this a little bit bigger. There's Google. There's Meta, same thing. Meta had a big day up, came all the way back. And that's kind of the trend that you'll see in all of these. There's Microsoft. So it's right at its 21-day moving average. You'll notice down here, all of these are rolling over as well. And these have been moving down recently. In fact, the month of December, it's been moving down even as Microsoft just went sideways. But as I've been saying, the market needs a pullback like this. Same thing with Netflix, still green, but it had a great day in the morning and pulled all the way back in the afternoon. NVIDIA is red now. So it also hit resistance. So 1, 2, 3 times. There's 2 ways you can look at this. Either it's a triple top, which with that pullback, that very well might be what it is. Or it is, let's see if I can do this. It is a delete that, change it to blue. And let's go like this. And go like this. That is a cup and handle. That is a classic IBD, Investors Business Daily pattern. If NVIDIA were able to break out of this 500 level up here, the target after that breakout will be the distance from the bottom of this cup to the top of the cup, which is 100 points. So the target will be 600. But it needs to break out. Do not anticipate these kind of signals. Wait for the breakout. And right now it's a red bar, so, and everything else is near the top rolling over. So it's not time yet, not ready yet, but it's interesting that cup and handle is there. Let's take a look at Oracle. Oracle's had a terrible time after their earnings. That's not surprising. SMCI had a great run to 320 and it had a big pullback. Nice run up today and all the way back. So it came down 20 points in one day. Almost at 300 now. And Tesla, same look for Tesla. Big day in the morning, pulled all the way back. So all of these look the same. They're all pulling back. They're all resetting, basically. That's the way I look at this. It's a reset of all of the indexes. So to prepare for perhaps that last week in December. Now, it doesn't have to do that. It could very well continue going down. In fact, if we go over to the portfolios tab and take a look at my market timing strategy, this was up 10% in the morning, this morning, and the end of the day yesterday. Now it's only up 7%, but this is in 5 weeks, so it's still not too bad. I will be watching carefully tomorrow and see what the market does. But if we look at our standard charts down here, especially the long term, look at that for QLD, long term weekly, it's still very much in a buy signal. If I look at a daily, same symbol, still very much in a buy signal. So there's nothing here yet that has told me that we should be getting out. Yes, that's not a good look right there, but I think that's profit taking. I think that is healthy. I think that's the way the market typically works. You can see where this pullback right here came to the 21-day, and we may come back down to the 21-day again at about 71 right there. So that's the thing to watch for. So that's what I'm seeing tonight. I know it was a little scary the last 2 hours. Let's take a look at VectorVest. This is the early signal, the DEW, still in a up signal. Things are curling over a bit, but it's still in a bullish configuration. So until it breaks this 30-day line down here, it's still in a bullish configuration. And back on the home screen, everything is yellow up here, but the MTI is at 1.64 now. I mentioned this too last week. When this gets up to the 1.6 area, that's where the market starts looking for a top. So that is, again, normal. And even with the pullback this afternoon, there were way more buys than there were sells. So I think this is going to be temporary. It might feel a little scary, and all the talking heads and everybody will say, this is the market's top. It's not going any higher. We're going back to the lows, and recession's coming, and every other reason they can think of. But that is not the case yet. I'm not saying it won't be the case, but it's not the case just yet. So all of our signals down here are bullish. By the way, one of the subscribers on this channel mentioned that I should send out an alert whenever one of these signals changes. And I will do that to subscribers of the website. Whenever one of these changes to a bear, especially the short-term signal, I will send an alert out to everybody and let them know. But right now, the short-term and medium-term is still bullish. In fact, until it breaks through this 21-day, I will not think that we're in a bearish configuration yet. So that's what I'll be looking for. And the long-term certainly is very bullish. Long-term bullish started way back here in March. You could even say in January, and we are still in a bullish configuration. So even with the big downtrend in the last 2 hours today, market still is doing what it normally does. It is taking profits, and it is pulling back. Healthy pullback would be good. So we will continue to watch it and see what happens. So that's it for tonight. Thanks everyone for watching, and hope you have a great week. Take care.